Metal markets have been in focus amid global uncertainties, geopolitical developments, supply side constraints, and shifting demand dynamics. From energy transmission themes and infrastructure spending to macro cues such as currencies and global growth expectations, metals continue to remain an important barometer of global economy. To help us understand what's driving these factors and what lies ahead for metals, we have with us Mr. Arijit Dutta, Vice President Equity Research at Kotak Mahindra Asset Management Company Limited. Welcome to the show, sir.
Thank you so much.
Please tell us, how does China's dominant share in global metal consumption influence price trends worldwide?
So if you look at China, both production and consumption, they're above 50% across ferrous and non-ferrous. So some tidbit here and there, but broadly it is above 50%. So since China is having this dominant share in both production and consumption, both demand and supply, any disruption there impacts metal globally. So China is the most important part in the metal variables.
So, despite global oversupply, why does India continue to offer compelling long term steel opportunity?
So if you look at the per capita consumption is low, that's a separate thing. Secondly, if you look at steel per se, India is almost self-dependent in steel. And the growth story, thanks to the government import restrictions that they have. So both the it boosting both the production capacity addition and the demand and the demand trend that India offers. If you look last 5-6 years, India already replaced China in terms of the GDP growth. And looking at the trend, both in terms of housing, in terms of spending, in terms of government push for infra, the demand look compelling. And we think that it will be much higher versus the global demand growth for the next few years. So that way, India is much better place in terms of steel, and China's oversupply will have a limited impact on the Indian steel scenario.
So, does the concentration of iron ore supply amongst the few global miners materially influence pricing power, or does China still have a say?
See, mainly two countries is dominant in this iron ore, seaborne iron ore trade. One is Australia, three main companies are there, and one company in Brazil. So they are the main iron ore supplier, and they have one of the lowest costs in iron ore. So what happens that if iron ore price increases, then other players come into because the cost is very high in those players. So historically, these four players dominate the iron ore prices, and China have a lot of iron ore, but the quality is very low. So they are dependent on the import. So initially, China have put pressure on both Australia, Brazil in order to tame the price. But two factors happened. One, the cost of iron ore, its production itself has increased after this concern for ESG that happened, that we see significantly increased from, kind of like 2016. Now, because of this cost increase, prices have also increased. So iron ore, which used to be around $60 2 years back, now settled at almost $120. So this is one part of the story. Second part, that another mine is coming after few decades. That is the Simandu mine, which is in Guinea. Now, this mine is almost like 12 million ton, and the globally, the seaborne market is almost like 1.5, 1.6 billion tons market. So almost like 7-8% of the global supply that is going to increase. And this is on the backdrop of not increasing demand. As of now, like for this year, it is still like above 5% demand decline. So in this kind of scenario, another mine coming into place can bring down the price. But again, the most important part is the cost of mine also increase.
Yeah.
So it will be a balance between it. So we don't see a big drop in prices, but we don't see any rise from here on. We think that it most likely to settle at marginally below 100 going forward.
So, China approaching aluminium supply capacity cap, how is it going to impact the entire world?
So this aluminum capacity cap is impacting. So when China, going back to the history, China introduced this cap in 2017-18 kind of year. That point of time, aluminum capacity was kind of little over capacity. So what they envisage that they will be coming up with a green aluminum, and they will be able to supply the power totally from the green sources. Just to mention that aluminum is one of the highest uh, power consuming metal. And if you look at China and India, who are the main producers, almost like entirely goes from coal, unlike the Western world. So what is happening there? Because of this restriction, power total 24/7 power supply from renewable didn't happen till now. There are batteries which are coming up, but till now nothing has happened. So new plant have come for aluminum in China, which is green. At the same point of time, no new plant which is coal based came because of this policy uncertainty. That is on the supply side. No new supply have come in last few years. On the demand side, thanks to this data center grid transmission increase that all the government is doing to support the electrification journey that we all are having. What is happening there? In the demand kept on rising, and because of copper prices which moved up following the mine disaster that happened in Indonesia, aluminum prices have also increased because no new supply is coming. Some supply is coming in Indonesia. Chinese companies are only bringing in, but there is a big question mark whether they can be replicating the fast execution what the companies to do in China. Still, there are uncertainty on the power in Indonesia, but that's made some supply demand imbalance in aluminum. And that's why we have seen the sharp increase in aluminum prices in last weeks.
Why is aluminium more sensitive to energy cost as compared to other metals like steel?
Okay, if you look at aluminum cost curve, first if you look at total emission greenhouse gas emission in aluminum, it is almost like 0.7% of the total greenhouse gas in the world. If you look at steel, it is like 7%. So steel is much higher in terms of total greenhouse gas emission. But what matters is the intensity. So for every ton of aluminum, you are emitting 7 times more greenhouse gas in steel. In other words, almost like 1.14 tons of greenhouse gas emit for 1 ton of aluminum versus around 1.52 tons in steel. So there is the difference. So that's why if you have to take down the greenhouse gas, it is aluminum. Uh, the funny part here is that aluminum is considered as a pillar to make the planet green because you will do more electrification. You need it in the grid. Uh, but aluminum production itself is the highest emission. Once it is produced, it will be helping you to reduce the global greenhouse gas.
So, with rising demands from EVs, renewables, and data centers, is copper facing a long term supply challenge?
So copper facing a long-term demand positive outlook because of all the aspect you mentioned, Raiki. On the supply side, there are two parts. One is the ore production and refining, and the second part is the smelting. So there is no problem in the smelting. We are in overcapacity in the smelting side. The main problem is the ore production and refining. If you look at the concentration, is more or less Latin America, where political and the social unrest is there, and this is causing major supply issues. I think if those things are resolved because the workers keep on demanding more money, I think copper can stabilize. And one sad incident happened in Indonesia. One mine is closed. All these things, if they start ramping up over a medium term, then probably the supply will be able to kind of match with the demand. But in the near term, there is pressure.
So, we know India's per capita consumption of metal is far below the global average, right? But do you think the winds will change?
This metal per capita consumption, which is below the global average, is a long. known thing. And India has been growing in a pretty decent rate over the years.
Hmm.
So normally you can take 1.2, 1.3x of the GDP growth. There is a story, but it will happen gradually. It is not that there is an inflection point when people will be consuming very much more metal. It will not happen because in China, the increase has become because of the density of population also. Too much of infra. Those
Hmm.
things in India, it will take its own time. But yes, the gap that we are seeing now is slowly going to break, not in a very rapidly. There will not be a overnight change pattern, we are saying.
Thank you, Mr. Datta, for joining us and sharing your insights on the evolving metal market landscape.
Thank you so much for us.
We hope this discussion helps our listeners better understand the risks, opportunities, and the key drivers shaping the metal market today. For more such conversations, stay tuned to Kotak Mutual Fund.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.